Hello everybody. First of all, I would like to say thanks to Mr. Setki and Insurance Foundation of India for the invitation and for organizing such an event. And I also want to say special thanks to my colleague partner Anurag Saxena, Paunshur, who also made this international connection, connected me or reconnected me to the Indian market and connected different people internationally. Let me introduce myself a little bit, that you know who I am. I'm originally from Ukraine, but I live in Switzerland. And by my education, I'm a biologist, but I've been working in agriculture all my life. And agriculture means agriculture science, agriculture production, agriculture insurance, agriculture reinsurance. So basically, in my life, I was a scientist, I was a farmer, I was the insurer, I was the reinsurer, and I was actually reinsuring the agricultural portfolios in India. And Mr. Sinha, I was reinsuring your agriculture portfolio some time ago. And I've seen this agriculture insurance from different perspectives, from the perspectives of different stakeholders, and that's what I want to share with you today or during these 2 days, the perspective of different stakeholders. Agriculture insurance is fairly complicated thing. It requires lots of knowledge, lots of technical knowledge. And many people are involved in this. But everybody is estimating the situation from the perspective of his interest, of his pain, of his gaps, but underestimating the perspective of other side. And that is why sometimes there are the challenges and there are the difficulties. So for the whole process to be successful, so there should be the balance of interest between different stakeholders. But let's go step by step. So then I will show you these aspects of agriculture insurance at different levels. At the macro level, like say the view of the government or even above the government, and the micro level, the point of view of the farmers. Currently, I'm the independent consultant and I'm working with different countries and with different stakeholders, and that include brokers, insurance companies, reinsurance companies, and the governments. And together we have some project in Palestine, for example. I'm also participating in the development of this agriculture insurance system in Armenia from the scratch, from zero. And I consulted also Mongolia and so on and so on. And I also was working in India still since the very beginning when the World Bank was trying to develop the new index coverage and so on. And I do encourage you, similar like Mr. Setki, please stand up and ask your questions and especially express your concerns, whatever you've been working, wherever you've been stuck in your work and you could not resolve some problems. So let's express this here, let's generate the discussion all together, and that it will help to move something, it will help to resolve something. You know Osho, he's Indian, he says usually the resolution for the problem lays at the level above the problem. So this, when you are at the same level and you look at the problem, it's difficult to find the solution. But when you look at the wider perspective, sometimes you can find the solution. So let's go. And if you look here, the biggest economy is US. So usually this is the industry. This is the services and this is the agriculture. And that's for every country is like this. Definitely agriculture takes the smallest part, but still agriculture is very important in every country because in every country people need to eat. People need to produce the food. And actually it's very important for every country to be self-sustainable in the food production. Believe me, not all countries produce all the necessary food inside of the countries, and when they need to buy this food from outside of the countries, it's not very good for the economy, yes. So in different countries, the contribution of the agriculture to GDP is different. In some countries it's much smaller, like for example in the US it's slightly bigger than 1%. But in other countries it's much bigger, and I would say in India it's fairly high. Because in the post-industrial world, agriculture tends to take the smaller part in GDP, but as higher this percentage is, it gives a perspective of the importance of the agriculture, importance of the problems related to the agriculture in the country. And besides of the contribution of the agriculture to GDP, we also have the percentage of the population that is involved in the agriculture production. And I think in India this is fairly high, nearly maybe 50% of the population is in the agriculture production. So, all farmers all around the world, they face the weather risks and they face the fluctuation of their production of their income. And they need to be protected somehow against this risk. And there are different ways how to protect, how to mitigate this risk, and insurance is one of the tools. It's not only the tool, but one of the tools. And here we see the global markets for the agriculture insurance. So the biggest part is in Americas, in Canada and US. Quite a big part in Western Europe, or all countries together. China is fairly big, and India now is taking very important part in the global arena in terms of this agriculture insurance, in terms of the size of this agriculture insurance. Here you see the division of the countries by the size of the portfolios. But this chart, so I derived this from the Munich representation. This is not the official figures, it's just the estimation of the underwriters. Like every reinsurance company does own estimation. And this is a bit outdated because Indian market is growing very, very rapidly. So basically now India is overtaking China. So India is becoming the second biggest market in terms of the agriculture insurance premium. The farmers around the world, they are very, very different. So in some of the countries, there is this huge industrial farming. And we're talking about 30,000 hectares of land. We're talking about the big machineries. We're talking about the huge dimension, huge perspective of the fields and of the production of just one enterprise. You can name him farmer. He's also the farmer, but he's huge. He's like a small country. And we have the smallholder farmers who have some tiny piece of land and some, let's say, very simple primitive tools to process this land. So the size of the farm and the structure of the farm definitely has the influence on how we're dealing with this. And from the perspective of agriculture insurance and from the perspective of the technology, look at these fields and look at these fields. For sure, it's much simpler to measure the size of the field, to define what kind of crop and how to deal with this crop. And this is much more complicated. And this picture is from Bhutan. This is your neighboring country, but it also reflects the situation in India, very small field. So, what the smallholder farmers is about? First of all, they're still very, very important for the entire food supply in the country. And in Asian countries, up to 80% of the food supply comes from these simple smallholder farmers. And in most of the cases, these smallholder farms, they're family operated. They quite often they're poor. They rely very much on what they produce from this land, from their land. They're very vulnerable in front of the weather. So if the weather is good, they produce good. If the weather is bad, they don't produce anything. So they don't have food even for their own families. So that is why sometimes they apply the religious practicing just to pray for the good weather, for the good rain or whatever. Quite often it is difficult to reach them geographically because they live in the isolated areas where they don't even have the roads. So that also was the point of Dr. Sethi, how you reach them with the insurance or with anything else. They have low level of awareness and education, and I must tell you, just generally from the agriculture insurance worldwide, education and agronomical knowledge is the key to the production. The farmers, they have the specialized education in farming and in agronomy. They produce higher yield because agriculture technology is fairly complicated. It requires lots of knowledge and requires correct decisions in the correct moment. When just the person doing his farming and just relying on the weather is not sufficient to produce the high level of the yield. And quite often for the big financial institutions like the banks and the insurance companies, the smallholder farmers are not convenient. It's like it has very high transitional cost for the insurance company and for the bank to do the transactions with these farmers. Like, for example, I noticed, Mr. Sethi, you said, why insurance companies don't charge the farmers monthly? Why they need to pay the premium for the whole season? Why they don't pay this in installment monthly? Because it have very high transaction costs. It will be quite uncomfortable for the insurance company. But India doesn't have choice. Practically all the farmers in India, they are small holders. So you need to deal with it. And all around the world it's called like microfinance and microinsurance. So you need to find a solution for this microinsurance. What we're actually insuring for the farmers? So the farmers are growing their yield and they have growing their crop and they have the yield outcome. But this yield outcome is not the same every year. It's fluctuating. It's higher or lower average. So it's jumping like this. And here we have the historical average of this historical yield. And sometimes the weather conditions are so bad that the yield performance goes very, very, very down. So that's when the farmers cannot produce, they lose the whole crop or they lose a substantial part of their crop. So they cannot, if they took the bank loan at this stage to plant, so they cannot return the bank loan, right? So they are in troubles, they are bankrupt. They have no food to eat, they have no money to pay to the bank, they have no money to maintain their family. So, and that's what insurance is for, to support farmers in these bad years. The insurance doesn't guarantee the farmers always like big profit, but the insurance like smoothes this fluctuation of his income. And here you even can see it's more for the understanding of the mathematical calculation. You can see depends what level of yield you are covering, how much you are paying to the farmers, and subsequently how much this insurance should cost. By the way, when your government is calling insurance companies for the tender and for the term sheets of the insurance, your government is looking exactly at the frequency of this payment, how much your product would pay to the farmer. And the farmers usually appreciate a higher frequency rather than the higher payments. When we're analyzing this fluctuation of the yield, the fluctuation of the income, from the insurance point of view, we want the explanation, what caused this yield drop, what caused this yield deficiency. And this is the example from US of the yield fluctuation. But by the way, do you see the trend of the yield? Generally, the yield level is growing due to the agriculture technology, because the agriculture companies, they always produce the new varieties, new chemicals, new machineries, other elements of the new technology. So generally, the yield is growing. Maybe not in India, because once again, the Indian farmers, they're smallholders and they're not capable to apply all this technology. But for the industrial farms, it is like this. But still, with the general yield growing, it still has this fluctuation due to the weather conditions. And here's the example, like every year is explained what was exactly happening in this year. And that's what insurance is about. So the insurance company is trying to understand, so how often the drought will happen. that's the frequency of the risk, and how much of the yield this drought will take away. This is the severity of the risk. And out of these two components, frequency of the risk and severity of the risk, the insurance company will calculate the price of insurance. And I must say that agriculture insurance is, I would say, the most expensive insurance out of all lines of insurance. So that's why it's fairly expensive for the farmers to pay the price of this insurance, and that's why very often the farmers need the help of the government in form of the subsidy. So, I already mentioned this connection and help of the government. So because this insurance is so complicated and because it is so expensive, usually it requires the cooperation of different stakeholders in the country. Especially when you want to cover all risk for the farmers, in most of the countries it cannot be done purely by the insurance companies. It always requires some help from the government. And this is called public-private partnership, because public institutions like the government and private institutions like the insurance companies, reinsurance companies, brokers, they participate in this process. Well, all the stakeholders who participate in the process, they have their own interests. They have their own agenda. Like everybody wants to fulfill his interest or want to receive his profit and so on. Sometimes these stakeholders, they have higher power in the country, so they start establishing this process more to their own benefits. In this case, the system will not work. The system needs to be sustainable, and the interests of the stakeholders need to find a compromise, a middle point, need to be balanced. These functions can sort of be shifted from one column to another. So, and in different countries, different stakeholders fulfill different functions, but more or less, who does what? So the government provides the regulation, general insurance regulation, but also regulation for the agriculture insurance. Sometimes the government provides the methodological support by doing this analytics and calculation around the agricultural risk. Very important is the government subsidy to enable farmers to buy this insurance because it's expensive. Sometimes the government has catastrophic funds, or the government provides some reinsurance. Then the government provides also some arbitration, because usually there are lots of disputes. Like it's never pure satisfaction between the insurance company and the farmer. Fully managing and fully constructing this agriculture insurance, fully managing agriculture insurance. Then insurance companies, they usually do the sales and administration. They're usually responsible for reaching the farmers and delivering this insurance. Then they do the underwriting of the risk and loss adjustment. We will have the presentations, what is underwriting, what is loss adjustment. Then they do the training for the internal staff, and hopefully they deliver some training to the farmers, which is quite important. Keep the connection with the reinsurance companies and attract the additional capital to hold this risk. Then sometimes there are the agencies and agents in between the farmer and insurance company. So they also help to do the sales, they also help to do the training, they also can help, this is called for cutting experiments, which is actually done for the government, but there are different agencies that can do this. And the farmers, first of all, they are accepting this insurance, and they give them their feedback. So they're complaining based on these complaints. Like all other stakeholders, they need to improve something, they need to recalculate something. The type of the state support that we can observe in different countries. So first of all, the premium subsidy, state reinsurance protective, price support mechanism, but this is more for the agricultural commodities. This is more for the grain price or food price, like to support the farmers, because we face the situation all around the world that farmers do the most difficult job. They incur the highest risk, but they usually receive the lowest price for their products. And then the traders come, they buy these agricultural products for the lower price and then resell this, and they have their high profit, which is not fair. This profit needs to be shared with the farmers, but it's not the case in the reality. So that is why sometimes the government needs to regulate this. The government sometimes provides a tax rebate for the farmers or for the agriculture insurance. Usually to establish their insurance and maintain the insurance, we need the data. And in many cases, this data is in the hand of the government Bureau of Meteorology or so on. The government can provide this and can help in processing this data, can help with the product design, can help with the educational activities for the farmers, and can help with building the necessary infrastructure for the agriculture insurance. Again, the case of India, many automated weather stations were established since maybe 2003 to support this scheme of agriculture insurance. Now the scheme shifted a little bit from the weather insurance to the yield index insurance, so probably the weather stations are not playing that key role, but they were playing for quite a number of years, and I think they gave quite valuable information. So let's look at the international examples where India can take something useful for own experience. Which scheme is the best? Which country is the best? Still the biggest market and the most developed market of agriculture insurance in the world is USA. But it exists for approximately 100 years. It had this evolution that started only from the hail insurance, and multi-peril crop insurance came only in 80s and so on. They have the perfect database. They have the perfect connections between everything, that things goes automatically, the data from the farmers and the insurance to the farmers, and many stakeholders involved in this scheme, and so on and so on. And it is heavily subsidized. So the government is providing up to 70% of the subsidy to the premium insurance, but also the government is subsidizing like the sales activity, the fraud dealing activity, the trainings, and so on and so on. You still can learn some elements from this US system, but it's not possible to replicate this entirely in any other countries. So you always need to look at the local conditions in the country. Canada is also the good example, but Canada has the provinces, and the state authority of every province is responsible for this agriculture insurance. That also has like the perfect connections and perfect data flow and big historical data collection, and so on and so on. And the third biggest and most developed system is in Spain. That has the state underwriting agency Agroseguro, that is creating the products, that is managing the insurance companies, that is providing the subsidy, and then the insurance companies are operating under the umbrella of this Agroseguro. But one of the good recent examples is all the systems, they are fairly old. So they exist for many years, not 170 years, 50 years. One of the recent successful case is Tarsim. Tarsim is the underwriting agency, agriculture underwriting agency in Turkey, that is also regulating, administrating, managing the whole agriculture insurance. And there are about 30 insurance companies in Turkey who are participating in this process of agriculture insurance. And they showed very good dynamics. So this scheme exists for a little bit more than 10 years, maybe 12 years. So they started from scratch, from crop, but they started not only from hail coverage, but straight away from multi-peril crop insurance. But gradually they added new crops, new regions, new lines of insurance, because not only crop insurance, it's also livestock insurance, greenhouse insurance, aquaculture insurance. And like many people are learning now their experience. They are very good in the loss adjustment techniques. Unfortunately, Turkish specialists are not allowed to go outside of Turkey and share their experience. But they always welcome the guests to their country. So whenever you want to talk to them, connect with them, come to their country, they will share with you all the information.
So this is by law, sorry?
Yeah, they have some restrictions. I don't know whether it's written in the law, but they have the instructions inside. Western European countries, the system of agriculture insurance is well established, but it's covering the limited amount of risk. For example, it's not covering drought. In most of the countries, it's covering hail and frost. But this is example of the Austrian agriculture insurance or crop insurance. And for example, in Austria and Switzerland, the agriculture insurance done is a monopoly. There is only one insurance company who is doing this, so all the know-how and control in the hands of one company. In Germany, there are 3 companies, but one of them is dominating. So the farming is fairly structured in these countries, and insurance is fairly structured, but they still have the room of improvement in terms of covering more risks. It has the big number of the operators, of the providers, of the insurance companies in US. And what's interesting, it has the state reinsurance through 3 funds. And the insurance companies, they can choose the risk of their portfolios by themselves and send to these 3 funds. And by this, the insurance companies, they are managing their portfolios. So they are making their portfolios nicer. So they choose the bad risk and they send this to the government. And they leave in their portfolios good risk, and then they reinsure these portfolios with the Western reinsurers. And out of the whole history, US experienced the biggest drought loss in 2012. And the loss ratio from the ground up of their portfolios was reaching up to 300%, which is very, very high, especially on this big volume of the premium. But due to this protection through the state reinsurance, the commercial insurance portfolios, they had the loss ratio only 120%, for example. So this is also the point of the government support and government help for the insurance market. Different stakeholders, they have different interests and different goals. So what can be done for the farmer? We can bring the income stabilization, we can bring the financial help in the catastrophical years when he loses everything. We can bring the financial education to the farmer through this process of insurance and the risk awareness. The question is, so this is the international known fact that Indian farmers are committing suicide in the bad years when they don't have the yields and they cannot pay debts to the banks. Over these years of existence of agriculture insurance in India, did this ratio of suicide decrease? I don't know the answer. I'm throwing this answer to the audience. You can comment later, probably. What we can achieve for insurers? First of all, insurers are the commercial organizations, except maybe the state insurance company, and they're probably not that concerned about the profit, but the commercial insurance companies, they want to make profit out of any line of business that they are writing, so subsequently they want to have the profitable agriculture insurance portfolios. We will be talking about this later, about the portfolio management and key elements that are influencing the portfolio profitability, so how things need to be constructed in order to be profitable. But this is the interest of insurance companies. So hopefully the insurance company put in the efforts to construct everything correctly and to receive the profit out of this. One of the components of this is to apply the innovations and international collaborations and so on, and we will be talking about this within these 2 days. What is the interest of the government? First of all, when it comes to the agriculture production, is actually the question of the food security in the country. Whenever the farmers are facing the troubles and they cannot continue their agriculture production because they lost everything and even their assets, they run to the government and they ask, help me. So the establishment of the agriculture insurance system means for the government is to shift this poor burden from their shoulder and share this with the insurance companies or with the private market as well. So this is the risk sharing between the government and between the private sector. And also this is the responsibility of the government, can give the good outcome back to the government, is like educate the farmers, bring the risk awareness to the farmers and the knowledge how they can cope with their risk and how they can do better with their production. Okay, thank you.